In the handouts section there, you'll find the digits for the weekend report, but then also I did a flashcard today for that trailing PSAR entry, and I want to talk through the concept diagram there. It's about an 80% satisfying strategy on that, and there's some goodness already being developed with that. Bill Scheid is exploring that as part of his research project for this year's research weekend. So we'll get that stuff going. I may actually use that diagram as part of the that University of Chicago workshop, a global workshop on mind mapping and mental concept mapping. I may use that just to kind of spread the word about what we're doing, but because I think it does a pretty nice job of condensing a lot of information into a single 5x8 sketch. Van, that's probably one that you might be interested in for reworking. All right, so let's see what we got today. So yesterday was a strong vote up after the doji on Wednesday. So Thursday was a decisive move north, and it pushed to a new 10-day high and a 30-day high on a full ATR move, which took out Wednesday's high and then closed really, really well. So my thoughts last night were basically to see what kind of a day would we have on Friday. What would be the urge of the participants to preserve, those 4 really good days of decisive gains going into a Friday with a lot of stuff in the news? Would we see an urge to some selling pressure as people are locking in gains, or would we see people trying to posture towards hurry up and buy it today because it's going to go even higher on Monday? And to a certain extent, so I thought today was going to be a tactical day, and it had those qualities. There was a slight gap down. There was a sell-off through most of the day, and then in about the last 30 minutes in the S&P, there was a strong move to finish slightly above Thursday's high that pushed it to a new 10-day and 30-day high, and then only gave back a very small fraction. So we finished the week, going into a weekend, 90 days away from the election, only 0.12% off of the 10-day high and the 30-day high. So that's a pretty strong move. And then if we look at the size of that move, $2.50, that's about 0.7%. That's about 0.7 or 0.8 of an ATR, so not even a full ATR of a move today. So there was no real burning urgency to go higher, but no real serious selling pressure on the downside. This is a market that just seems to do what it wants to do regardless of the news, and people are, I think, fully into it already. And so there's not a lot of additional buying pressure, but they're not ready to cash out of it yet for fear of being left behind. So that's kind of where we are. And it was a very strong week. When we look week over week, it had about the same size of a move this week. Whoops. About the same size of a move this week as it had last week and the week before. So it was a normal sized week, but it was all directional from low to high. So a very strong and decisive move. When we look at, let's say the 10-period regression line, just a really strong move altogether. With a low of the day about 6 days ago, and 10 days ago, but really it tested that low again just 6 days ago, and then finished at the high of the week right here. So that's actually if you start from this angle, that's a really strong move. And notice how quickly the RL10 resumed and made that powerful move off the bottom. So the regression line is pointing to the way up. The Bollinger Bands and the Z extension is looking really good. When we look at the the trend indicators, say the RL30 extension is still positive and sloping up, and almost all the price today, the open and the close, all finished north of that RL30 line. So that's a solid solid vote of confidence. And we'll see that move is actually accelerating, because if you look at the the RL, or the baby dragon, you'll notice that is that's accelerating. So if we took a look at the RL10, it's up, the baby dragon is up, and they are accelerating past the RL30 extension. So that means that the short-term momentum is increasing to the upside. So that's a good thing. We will notice that today it's underneath it's underneath the regression line. But we would have seen that today the seasonality of MACD went to summer today. So it had been summer, fall, and now it just resumed summer. So that's another reason to love this and to be willing to hold it. We'll see that the dragon extension is solidly up, and the dragon is basically beginning to straddle that Z1. So he's starting to creep out beyond the edge of the river. So that's a favorable sign. The PSAR continues to march northward, just kind of ratcheting up that stop as we go. So there was still a strong buffer between the low of the day and the PSAR. And then tomorrow the PSAR ratchets up this little extra bit, so 326.2 will be the PSAR approximately on Monday. And it's really, even the low of the day has really closed decisively above the Bollinger Band mean. And the close was closer to Z2 than to Z1. The last 5 days have all been outside of the dragon. That's very favorable. And except for just a little bit today, everything north of the baby dragon. So that's very favorable. On the downside, we would say support at low of the day at 332.30. Top skin of the dragon at 330.2. Z1 at 328.50. Spine of the dragon at 328.05. PSAR and the bottom skin of the dragon basically 325.5. I would take the PSAR plus one here, 326.2. And then it's a straight shot down to the Bollinger Band mean at 320.4, and then the 10-day low at 319.5. So that 10-day low is going to be in place for 3 or 4 more days. This 10-day range from high to low is about 4.6%. That should be extended a little bit. That makes that about 4.6% from here, from the high to the low. And with a daily ATR of just a fraction over 1%, that's about 4 ATRs from the 10-day low to the high. And that makes this week a little more than 2 ATRs uninterrupted gains from low to high. So that was a pretty strong week, all things considered. To the upside, really, it's just there's no resistance overhead that you can see unless you go months ago, and then you see that the Dragon's all-time peak was at 339. The RL10's all-time peak was up here around close, just a little bit, right below the Z3 at 344. So could it get there in 1 week? It would have to have another week just like this week to get close to that. So yeah, it could happen, but it would take a week of just uninterrupted gains to really make that move. Today's job reports and the challenges in politics with doing the right thing for the people doesn't make that look favorable. But this market has been able to shake off that kind of negative news all week, and even in the previous 2 weeks, it failed to fail further. So stranger things have happened. So this is cautiously optimistic about the upside. I mean, everything that you read from this. The only thing that argues for the downside is the absence of evidence, in headlines. So the downside would be low of the day, 332, and then the others that I've just identified. So let's take a look at the sectors today. Alrighty, so we have the S&P was basically flat for the day, at 0.07. Diamonds were up 0.26. The Russell had a rebound after yesterday's underperformance. It had a pretty strong vote upwards at 1.59%. Now, in terms of the sectors, let's see what happens. So, energy and consumer discretionary were fractionally better than the S&P at 0.13 and 0.15. Mexico 0.27. Fractionally better were healthcare, XLV, and materials 0.34. Clean energy 1.52. That's just continuing to crush it. Simon Property Group representing commercial real estate 1.6. Oil exploration 1.75. Finance was the big mover today at 2.2. Let's call it that way. When we look at the real winners among the companies, we can see Caterpillar and Walmart up 0.4, 0.5 respectively. Coke and Home Depot that we highlighted earlier this week, 0.67 and 0.8. Nikola and Facebook, 1.1 and 1.2. U.S. Steel, nice day today, recovering from that sell-off below 7 at 1.8%. Nucor Steel, just a real big mover today at 2.5. Devon Energy, 2.9. So we've seen better performances than that on days, but I think it was the cautious optimism of Friday setting in. All right, underperforming today. So the S&P there was at basically flat at 0.07. Japan also flat. Treasuries minus 0.67. Still hovering around that key price level of 170. Didn't lose that much today, but it's still kind of marking time, I think, waiting to see what the S&P is going to do. Everybody holding their breath. Oil minus 1. The tech sector down minus 1.47. Emerging markets minus 2. Brazil minus 2.5. Silver minus 2.5 after an amazing week. The triple Qs and the triple tech sector down 3.2 and 4.3 respectively. So Techs of all type took it on the nose today. Wheat and precious metals hovering around that 53 key price level. And then those two speculators there, Virgin Galactic minus 5.6, Kodak minus 7.5. So, and then Win minus 3. So in terms of the big movers in the companies, those were more on the downside today. Troublesome for the techs. Amazon and Microsoft both sold off about 1.8. Twitter was off 1.5 after starting off the day pretty well. Intel and NVIDIA both down 1.1, 1.2. This was the first day in recent memory where Intel slightly outperformed NVIDIA. So that pair trade was basically flat today. Google also off a fraction at 0.37. Cliff Natural Resources and Alcoa underperforming that XLB sector at minus 1.4 and minus 1.5 respectively. So, and then Apple finally minus 2.5 after a pretty good week. So it was kind of a quiet day in that sense. The losers lost more than the winners won. And it was, finance and these materials and energy had much bigger play today. Okay. Encouraging is the side of that IWM, the Russell 2000 having a little bit more juice after yesterday's sell-off. Let's see. I'm going to take a look at a couple of the trades for the day. So this is the finance sector. So this is a chance for you to kind of play along at home as we start going through the day. We'll start with yesterday's close, and there's our Z3, kind of our Z3 pinch box, if you will. So that was a pinch box off the low. I treat the gap. I treat that gap as a harsh winter. Find support. RL10 reverses, becomes spring. And then I take the supported spring crossing there using in this case, I'm using the PSAR flip as the initial risk. There we go. Now, as I look at this, as I'm framing this, I'm going to get to no lose plus dinner for two in the usual way. But when it comes time to look for key moves, if it can break above yesterday's that Z3 excursion at the close and then above today's Z3, both of those I would take to be favorable signs. There's the RL270 right there, and that's basically the PSAR. Yesterday's VWAP is about the same, and here's today's VWAP. I'm just going to draw that as an extension. Okay, so here we go. It's made a nice move to yesterday's Z3 excursion, double top and start selling off. So I like to get paid right off the bat. So that would be given back, roughly that much. Oops, sorry. The big reveal. Keeping this much of the gains versus a sell-off of that much, or an initial risk of that much. Now I like this because it gives me a low of the RL10 and then a higher low of the RL10. So I treat this as a continuation pattern supported spring crossing once again based on that higher low. And this feels like about the same kind of risk, if you will. Makes a rollover at the same spot that it did before, so I just get paid a little fraction again. The VWAP is still marching along. It gives me a second higher low, excuse me. So now as I'm reading this, I'm reading a low and a fractional win, a higher low, little fractional win, higher low, fractional, at least a reason to enter. I'm still looking to see, it's got to get above that Z3 line for this thing to really unfold. And now we're about 90 minutes into the day. And finance at this point is doing better than the rest. It had 2 runs to make highs and it couldn't, so I just scratched. And then it finally broke. So just another re-entry. Now I'm noticing that the VWAP is starting to flatten out. So now the VWAP is down here instead of that previous VWAP extent. That was the size, that was the strength of the initial surge, but then it's kind of flattened out. It couldn't maintain that initial momentum. So we tried again, and of course we're going to do our standard risk box there. And if we can get above our Z3s, then that's gonna. This feels like it's showdown time. Fish or cut bait time, I suppose. Now it works. Missed a second entry. Take a nice cash at the Bollinger Band mean. So again, this would be just the usual Wu Wei kind of exit. Which would look like this. So we're just tracking here. And then when that you get about three or 4 dots above the entry, then you pick up the Bollinger Band mean. And then just in the usual way. This thing almost immediately reverses. When it clears the previous, that's more of an emerging dragon and a Z3 breakout. So the stop would be something like that. And a routine exit on the Bollinger Band mean with the Wu Wei exit again. So we're right there. And then approximately here. And then you just read that across to the Bollinger Band mean. When the Bollinger Band mean takes it out, then off you go. If you use the more aggressive, sniper, you might have taken that. I wouldn't be offended if you took that one using the, taking half the position on the PSAR. If you do that, you have a decision to make. Do you go ahead and re-enter on that little elbow, that little rebound and recovery in the same way that we have all the way down? Either one of those plays is fine. There are days when I wasn't feeling especially mentally sharp today. That just one scoop and the Wu-Wei exit feels like a pretty easy one, and then the rest of the day was just was almost out of gas. This is New Core Steel. This is the other one that really started off well. It was one of the movers today. Here's yesterday's Z3 pinch. I should put that on there. I like this one because we've got that two higher lows, or a higher low, I should say. We have this low, then this low is slightly higher. It held support at the VWAP, crossed the VWAP. So I feel good about that one. Get paid, immediate stop and reversal, or stop and reentry, I should say. So that first one is basically a scratch. Get paid a little bit. Gave back, basically one of the execution risks. Kept about half of what I had. I tried shorting this one because it showed not much signs of getting long. That ended up being a scratch because it held at the VWAP, and then it started to move out again. And now we've got that Z3 pinch. Oops. That's about the same size as the wrist boxes we've been having, and that pinch has now occurred. So that feels like the natural minimum manageable wrist box, like a Z3 to Z3 excursion. That one is now working. I like that it has gotten above the previous Z3 line. That's a good thing. And that dotted red line is yesterday's close. So it's now back up into yesterday's pricing, starting to work. Missed a second entry, but again, I was not especially sharp today. By this time, it just felt like, that's enough. So the Wu-Wei exit on this one, and I'm starting with the Z3, but it's the same principle. So when that gets about, 3 or 4 dots above the entry, and just pick up the Bollinger Band mean, and there you go. I wouldn't be offended if you took the He took the sniper exit here, and then at 145, and this is clearly one of the two big winners of the day, and you would want to pair that with a immediate reentry. I didn't do either one of those. I was just content to ride the Wu Wei Bollinger Band main today. Yeah, like I said, yesterday was a really physically demanding day for me because we had a hard soccer scrimmage, and I had worked out really hard on the rowing machine and the squat machine and the new chin-up bars, and so I was really smoked, and fell asleep with the puppies in the big easy chair watching a documentary. So I got up this morning kind of dull and stupid, and I just never really got out of the level C or grade C of kind of mental alertness and mental adjustment. So I really only was trading at about half of my mental efficiency. So I only got XLF and new core, and I didn't really get those second positions in. So I felt more like I was closer to idle than I was to, a high performance machine. It really wasn't till about 5 o'clock today that I really felt sharper. And part of that was I've been struggling with the spreadsheet, was giving me some troubles. And then for some reason, it just magically self-repaired. And so some of the breakdowns it was giving me just disappeared. And so I got everything produced by 5 o'clock, within an hour of the market close. I had all the weekend reports done. I just had such a surge of energy, knowing I was not going to have to suffer this weekend. It wasn't really till about 5 that I got things going. So those were a couple of trades of the day. I like to have patterns that when I'm not especially feeling smart or energetic, that I can still kind of go to work and punch the clock, punch my ticket and kind of get it done. I think that was the last one I did a new core. No, I'm sorry, I had tried another one, I guess. Another couple. Yeah, a couple, a scratch and then a fractional. So, I mean, by the end of the day, those two were actually pretty good. But I didn't really have anything on the downside. Were the big moves today, and some of my usual trading suspects would have been there, and I just didn't have it. Just didn't have it today. On the other side, so when I'm not feeling especially smart like that or aggressive on the trading side, I did have a little bit of time to do some sketching, and so let me just cover that now before we get into the weekend. So this is the PSAR trailing entry. It's now good enough, I think, that I can give it a concept diagram, sort of like the 70 or 80% solution as a thought experiment or concept or even a strategy. And so this is a refinement of the supported spring crossing SSC entry. And the point of it, it's a refinement of that. And the point of it is that we're trying to catch sharp upward moves that happen after a sharp reversal. All right. So let's just identify some of the the control measures. So right in the middle, this big fat orange thing that governs everything is the dragon, the 10-period Bollinger Band plus or minus 0.5. So the middle of that thing is a 10-period simple moving average, the little spine of that dragon. The RL10 is the smoothed price. And one of the things that we'll note is that what sets up the supported spring crossing is a harsh winter. So there's going to be some sharp, unambiguous move to the downside. And I've drawn it in this case where the RL10 in the fall has now switched over to RL10 winter, and we have a harsh winter. So the harsher the winter, the better. I'm going to say at a minimum, that has to be a frog box move during whatever this sell-off started in. Maybe that's a Z3 pinch breakdown. Or maybe that's a collapsing dragon. Or maybe that was the open and this was some kind of hybrid frog move and it moved at least a frog box. Anything less than a frog box, and I'm just going to say it's not a harsh winter. And the reason is that we define the frog box as the first all signal directional move. So there's no noise. So in the world of every move that starts looking like a trend has some components of signal and noise. And so we define the frog box statistically as the non-noise move. That's the beginning of the non-noise move. That's the standard deviation of the ranges of the last 30 days, just mathematically defined. So that means the frog box is a constant all day. And then tomorrow there's a new, we added a day and we dropped off a day, so it reruns, and then the frog box gets recomputed each day. But it's a constant for the whole day. And so we define that as the first all signal directional move, a non-noise move. So anything less than that, you certainly could not call that a harsh winter, because there was still, if there was any noise, if it's less than a frog box, there's some amount of noise in that. So you wouldn't say that's unambiguously harsh. You would just say, well, that was kind of a sell-off. So for right now, I would just say that this sell-off for a harsh winter has to at least be a full frog box for our intraday trades. Okay. And I'm also going to say, the harsher the winter, the better this setup is going to be, because the harsher the winter, the greater the possibility that it was an overreaction. And now this move that's going to give us this green arrow up, the harsher the winter, the more likely that thing was an exaggerated move, because fear is 3 times more powerful than greed. So if it's the harsher the winter, the greater the possibility that this move, which starts to reverse like right in here, the more likely that this move was an exaggeration. So for as long as this thing is going down, it's just clear, hopefully we had a collapsing dragon or a hybrid frog or something like that, and we're participating in the downside. Hopefully that's the case. It doesn't have to be. Like, you don't have to have a winning trade in order to make this thing work. But at some point, that strong downward move stops. But something happened where it's no longer following that same downward trajectory. Something happened in here that caused this at least to start not failing as fast. And what is that? Well, that's going to be the arrival of buying pressure that has been alerted by the magnitude of this move. And that's guys that are saying, that thing is probably overdone. It's probably not that bad. And now here's an opportunity to buy something, on sale. Something we want to own, and it's on sale. So that buying pressure comes in, and that's enough, at least, to slow this downward momentum and get it into some kind of turning motion, or at least causing a the sell-off to slow down. And at some point, this baby dragon, this purple line coming down. Now that baby dragon is a 3-period moving average of the RL10. So when you have these large downward moves, the normal picture looks something like this. You have, this big thick dragon has picked up a directional move, and that's a 10-period simple moving average plus or minus half. Then you have that smoothed RL10, which is also a 10-period look, but because it's a moving regression line, it's much more responsive to price action. So it will always be lower than the dragon was during that sell-off. And then this little baby dragon, that's a 3-period moving average. It's going to be closer to the RL10 than to the dragon. And it's going to be parallel, and it's kind of pacing. So you'll always, when you have these large, harsh winters, and this thing kind of gets legs and starts becoming directional, well, then you get those 3 downward trend indicators looking something like that until something changes in the market participants, and then these guys start buying it, and then you get the first indication that something has kind of officially changed is when you get right here the baby dragon gets crossed by the RL10. The RL10 crosses the baby dragon, and that's an alert that tells us a couple things mathematically are likely to happen pretty soon. And that is that pretty soon this winter is going to become spring, and that RL10 is going to cross the dragon, and that PSAR is going to flip. And those are the 3 criteria that give us the supported spring crossing. So the first one is a harsh winter, then winter turns to spring, the RL10 crosses the dragon, and then the PSAR flips from this long downward trail. And then when this has moved up far enough, this thing just flips and goes. Now, in order for this to flip, that means the RL10 had to move past the PSAR, because the PSAR is based off of the RL10 and not off of price. So this is a slower, smoother, more orderly transition. But the price we pay for having that smooth and orderly transition is why we are thinking about this trailing PSAR as a refinement. Is that the harsher the winter, the hypothesis would go, the more likely it is that was an overreaction, and now suddenly you really got guys coming in that want to buy this. And so the stronger that buying pressure, the quicker this thing cracks, and the sooner this thing just bolts and takes off. So you could very easily see price accelerate and get past the RL10, and it might look something like this. And in the 1 or 2 bars that it takes, it might have done something like this, a sharp move up, and the bar closes, and then a sharp move up. And those 2 bars were enough to cause the RL10 to reverse and turn to spring and cross the dragon and take out the PSAR. And then when this bar closes, maybe already up in here by the arrowhead, then and only then, when that bar closes, does the PSAR officially flip. And now at the start of the next bar up, wherever that thing closed, this is where you might end up seeing a formal entry signal somewhere up in here. And the risk is that we're now seeing our initial risk box. Sorry, looks something like this. Our initial risk box is down here, where the PSAR flipped. Whereas, if we had been able to get this little entry here, the idea of taking the that trailing PSAR is I can now get an entry here and have a smaller, tighter risk box. So here's my risk box now. Okay. And that gives me the opportunity now to make bank on this little section right here. So in fact, by the time under normal circumstances that I would be getting my entry, that might actually have been enough room for me to have moved my stop from here. And locked in a no lose plus dinner for 2 on the improved entry. I could maybe do this. And now instead of entering here, with a very wide stop, and then trying to figure out how soon can I get that to no lose plus dinner for 2, maybe I can get that much earlier in the life cycle. So the only time that you really see this is if it turns out that this really was an exaggerated sell-off, and then you get this amazing 1 or 2 or 3 bar explosive move to the top side, and we get caught flat-footed waiting for these bars to close to get the official PSAR flip, and then make a decision. Do I still want to get into that? And saying, man, I wish there was a way that if this thing really took off, I could get in. Now, there are times when you don't get that explosive move, and instead what you get is something more like an orderly reversal, and this thing goes up in, little fits and jumps, and maybe it looks like this and this and this. And then by this time, the PSAR has flipped, and then you can get an entry in here, and your risk box is normal. So this refinement actually lets us get an entry at approximately where we'd like to get an entry at a real orderly entry, something like that. So by looking at this PSAR, these PSAR dots as they're coming down, we're just being mindful that when this thing snaps and reverses and starts to rocket north, then we have a way that we can get into that position. So that's what we're trying to do with this. We see that enough that it was bugging us and causing us, to question the rules, and said, is there something that I can do systematically that allows me to get that sharp move? Because our logic would be that brutally explosive move shows that there was really a tipping point in the balance of power between, the bears who made this thing sell off harshly into the winter, and now suddenly all this buying pressure came in, and zoom, up it goes. That's actually in retrospect, that feels like the easier money. So this is an idea then to try to help us get that move. So I want you to see why, some explanation of why that thing um, should work or could work, or what's going on between the market participants that makes us want to get this trade. So again, the idea is that we're watching this trade come down, and we want to get surprised into that trade right in here on that PSAR dot -1. And that way, I don't know if that makes all that much difference, but to me, it kind of feels like it does. That there's just that little bit of extra confirmation between the actual PSAR dot and then this once removed. So I like that second PSAR dot. That actually lets me have enough time to, if I'm watching this thing go and I start putting in these like descending trailing stops or trailing entries, I suppose. Each time that thing moves one more dot lower, I can just keep dragging that thing down. And then if it does reverse, and now suddenly go smashing up through there, bang, I'm long at that dot, knowing that in the powerful move that goes up, this little PSAR dot is going to flip from here down to here. And then I would have wanted to get in, only now, because I had to wait for it to close, I'm getting in up here or further up the stack, and then I feel like I'm being too slow. So that's the concept behind this particular refinement. Okay. So just to kind of review some of the written language, then, what we're trying to do is catch. We're trying to catch that sharp upward move of a sharp reversal, and we think that could be the case. That because of the sharpness of that winter, that rebound could be even sharper. The sharpness of the winter is what alerts all these little buying guys that, oh, this thing is a chance to, to get long on something that was overdone. So it's the long sell-off which creates the harsh winter, and that harsh winter is what sets up the SSC reversal. And you normally see a long PSAR trail that is paralleling the dragon, which is paralleling the baby dragon, which is paralleling the RL10, which then ultimately reverses, crosses the baby dragon, becomes spring, crosses the dragon, and maybe somewhere in this magical space is when that explosive move comes. And so you're ready for it, and you're ready to get in. And the key insight is, because we have chosen to use the PSAR is using the RL10 data, is that is slower to reverse than if we were just using price data. But we actually prefer that orderly transition, and we can accept it being a little bit slower, but now that creates this little magical moment. So we've got to have a plan for that. But otherwise, these long, smooth, orderly PSAR moves are a really valuable contribution of that indicator that uses the PSAR instead of price. Okay. So that's the point on this piece of text here. Sometimes the sharp moves race north before the PSAR flip occurs. So in other words, the move happens before it flips from here to there. Now, no matter where we get the entry, whether it's here or up here at whatever that routine place would be, our standard ICE stop, the initial stop, is at the PSAR flip or the bottom of the RL10, which is where the PSAR is going to flip to. So when you put that little trailing stop in here, you haven't seen the PSAR flip yet, so you don't know where to hang that box or how far down to take it. Mathematically, that first PSAR dot happens at the maximum excursion of the bottom of the RL10. So in that sense, it acts like a collapsing dragon. And that's what you want, because if this thing actually fails to the upside, then that's the price level at which you're going for another collapsing dragon. And the size of that one is the size of the previous, that previous harsh winter. It turns out that that's really true, and that this thing's going to be that big. And so that makes this whole region in here, signaled by the baby dragon and this crossing of the dragon, and this whole region in here is a critical state. And so now we have a way to play that critical state in both directions. If there's a surprising move up or that big non-surprising move down, we're ready to go. So you place that initial stop at the bottom of the RL10, which is where the PSAR dot's going to be, which is where you would draw your initial stop if this was just an ordinary grinding move, at which time the PSAR has time to reverse. And then everything after this entry is standard framing and exit management, meaning that we're going to keep that Wu Wei exit in place until we get 3 or 4 dots above the entry, and then we spring that up here to a no lose plus dinner for 2, and we lock in that gain from no lose plus dinner for 2 to where our entry was. So we're already at no lose plus dinner for 2 sometimes before that formal entry actually even occurred on those big sharp moves. And I'm agnostic on whether you want to use the Wu Wei or you want to just follow it with the PSAR. Bill Scheit's studying that. Other guys are studying it. You should study that. So I'm not, I'm agnostic on what feels better for your risk management. Now, what I want to say is, in terms of standard framing and exit management, I believe in symmetry. So the size of the downward move just happened, so it is reasonable that it could move that far that fast. So I would just say from the bottom of this RL10, just a return to whatever triggered the sell-off, that's certainly reasonable. And if that move is a frog box, look what you get in terms of this kind of entry, right? If the move off the bottom is a frog box, then you're going to get something like a fractional frog box from wherever your initial risk was going to be to your entry. So it turns out that this is very similar to that whole frog box or hybrid frog kind of trading, that this move off the bottom, that might be a third or a half of a frog box. If it's half a frog box, now you're just doing frog trading and you don't even need another reason to do it other than this is like hybrid frog trading in that sense. And if that was a third or a half of a frog box from wherever your initial risk was to your moment of entry, then you've got another one of those back up to whatever price was at when it triggered, whatever triggered that sell-off, would have been up in here, whatever that was. So in terms of reasonable risk management, I would just tell you, if you're thinking about this just like frog box, the move that takes you higher, what you're looking for your Wu Wei exit or your sniper is just something that says, hey, whatever this was, as soon as I can get this to no lose plus dinner for two, and I've locked in whatever my entry was. So if my entry was over here, then my risk was down here. And I get this powerful move, bang, I'm in, and then up it goes. Then really, in terms of that, the recovery of a full frog box move, all I'm trying to do is figure out how quickly I can, like a sniper, move my stop to no lose plus dinner for two, and then I'm good to go. And now it's just a science project from this point on. So if this was a frog box move, that is a signal move. What this trade says is, if it just retraces that signal and just gets back to where it was just 30 minutes ago, I have a tradable move and I can get well started, and I'm not going to lose any money on this trade. And this might have actually been the sell-off that gets a bunch of inventory, and then this thing is going to go become the actual move of the day. Hooray, hooray. And now I got well started. All right. So that's the main idea behind this flashcard and this concept. So that's the PSAR trailing entry technique. It's a thought experiment. It's a method. It's a technique. It's becoming a strategy. And I think it's it's reasonably connected to all of these other components that we use as part of the SSC. And one of the things that it does is it gives you once you master this thing, when I say master, you feel comfortable that you could frame it and execute it, and you tested it in paper trading and forward trading and small position sizing, and you feel comfortable enough that you can have some skin in the game. That's a sufficient level of mastery to get into it. You should kind of be able to talk your way through this video and be able to explain it kind of in your own words. And then more importantly, start looking for it, give it a shot, see what you come up with, see how it feels. And it really, I would say, 2/3 of the time, it's kind of a moot point, because it's just it's much more like an orderly entry. You don't have to worry about that. But it happens enough that I sort of like to just know and have it in my arsenal. And I really do see it strongly connected to the whole idea of the frog box off the bottom anyway. And I get to this point over here where I'm looking at, it's like a third or a half of a frog box off the bottom. For no other reason, I want to get into it already, because I don't want to wait for a full frog box off the bottom. Then I feel like, man, I was late. Maybe that's 0.7 of a frog box. And if that's half or a third, I'm already, kind of ready to go. And then when I see a really sharp move up like that, that means buying pressure really came in that wasn't there before. So that's my thoughts on that one for you. Okay. So that's 9:15. I want to go to the weekend report. I'm going to do a coffee talk after this one. Now I'm going to save the coffee talk for tomorrow morning. So I don't want to keep you too late. Among the things that I was doing today, I was listening to Sandy Monroe, who is a legendary design thinker and manufacturing expert. And his business is to reverse engineer products for manufacturers and teach them how to make it more efficiently, lighter, cheaper, faster, higher quality, and so they are on the other end of the entrepreneurs who grew up inside their one particular product and are very narrowly focused on what they're trying to do, and they may not be manufacturing experts, but Sandy Munro and his guys are manufacturing experts, strong background in traditional automotive engineering, so they know how to produce at scale and how to do that in the relentless search for reducing weight, increasing strength, manufacturability, the old extension of poke yoke. So he's got a really nice couple interviews on YouTube with Now You Know is the kind of guy. So if you search Sandy Munro Tesla Lies in depth, you can't miss it. And I put the links onto Patreon already. So this was my one-page kind of modified Cornell note sheet. I'm going to use this as part of a lecture on implementation for my doctoral students and my Army logisticians. And there's just a lot of really good ideas in there. And it's worth listening to the unfiltered video without me lecturing to it. If you're interested in that kind of stuff, of hearing what a genuine craftsman sounds like and how he approaches the challenges of improving a process. That's that Lean Six Sigma, Shingo, Deming management, Toyota production system approach to improving reliable processes. And that's what we're trying to do. So if we know what that sounds like, just think about Sandy Munro being on the other side of your trade. That he's helped the other guy improve his trading process, and that's what you got to contend with. So if we can adopt that kind of mentality, we're going to learn some interesting things. So these were the notes that I took away from part one. On part two, it was an extension of that, and he was looking at the Cybertruck, this Archimoto electric three-wheeler, looking at robo-taxis and airplanes. Guy's just an unbelievable thinker, and I really think that's worth about 40 minutes of your time, is to get grounded in how he thinks about Tesla as a company. He also has some things to say about Nikola Motors, and he believes that hydrogen fuel cells are the fuel of the future if they can solve some of the energy efficiency per unit weight problems, which is a function of physics, safety, and cost. That there's reason to believe that Nikola Motors could really do something that changes the game for non-petroleum based. There's either going to be solid state batteries, which absolutely revolutionizes the game, or it's going to be a cost-effective, safe hydrogen fuel cell that breaks the model. And when the paradigm shifts, you get into the strategy of laggards. And laggard strategy is first at being second. And his point is that when paradigms shift, there's a principle going back to zero that laggards can actually win if they're still in business, because they don't have any of the cost or the changeover costs of researching and then transformation costs. They can just adopt the brand new paradigm from zero. They have less to unlearn. And so in his view, the solid state battery or the cost effective safe hydrogen fuel cell is one of those game changers. So it's worth listening to the way he thinks about this revolutionary and evolutionary change. So well worth your 40 minutes. I'm going to coffee talk that one tomorrow. All right, so let's get to the weekend report. Bullish normal, wildly overbought, 8% buffer to sideways. ADX getting stronger, still 18.7. It has to get above 25 before it becomes exceptionally strong. If that were to happen, you'd see the risk Z improve. It's still favorable. It's risk on, but not abnormally so. So that's sort of the sweet spot for swing trades, that second leg up of the swing trade. So the first leg up was this one, which I was very tentative about. God dang it. I was very tentative about that. But now we're starting this third leg. So I see this as the real potential. The first leg was that first burst out of spring into summer, and then it peaked. And now the second leg feels like that it didn't go back into the winter. It didn't fall back into the winter and come back. Like here's where it rolled over, and this was that collapse in the risk Z. And here's the first leg up, and then it started to roll over, but now it has failed to fail. So now this could actually be, a second leg up. And, if this gets up beyond 2 to like, this is like 3 sigma, then this would be another, an 8% move to the upside could happen there very easily. So that's how we would read that. Looking at theoretical exposures, still at 100% for ETF2. We're holding strong symbols here in the core. The Qs, emerging markets, and SPY have been doing good. Tech, and consumer staple or consumer discretionary. Clean energy's been doing good. Wheaton has paused, but still good for the month. And then you can see some of the other leaders based on after the first week, what's still in play. The difference being that the small caps are starting to pull ahead of the large caps, IWM versus SPY, and that's very favorable. And then no real change in here, except that PBW has moved into the lead ahead of Wheaton and ahead of Tech. So we're still owning the top 3, but the order of march has changed a little bit. Apple, Home Depot, Microsoft, Cat, and Disney, silver, clean energy, and so forth. What? Oh man, that was strange. All right, so let's take a look at the monthly market health check. This is just the first week, but very favorable, started well and finished strong. That represents the first week of this month and pushing near all-time highs. I think my stop would be here at the weekly low, which is also the monthly low, not more than the PSAR, because I don't want to give back half of the gains from above the dragon. So this is half of the gains from the skin of the dragon to the upside. So I don't want to let this thing sell off that far. Look how far it fell in 1 month. And in 2 months ago, it fell from here all the way back there in a matter of a week. So I don't want to let that get away. On the weekly basis, this tension to the upside resolved to the upside. It's beyond Z1, testing all-time highs. It broke through the RL10 and hump of the dragon this week, and all systems go until otherwise noted. And I would still take this weekly low as the boundary of locking in the gains. I'm relentless about risk management. We've already seen the daily. On the 30-minute, this is what my caution about today was. It had a gap up and then sold off for most of the day. And then really only in the last hour did it make that definitive move that caused it to finish at a new high for 10-day, 30-day, and today's close. So that was the last minute jockeying for position, but there was not much interest today until posturing for the weekend. So that may have been some guys. Maybe we can scare them out of positions and then buy a bunch of inventory. I really take that as a positive sign for Monday's open. Tech and emerging markets lagged a little bit, but this was much more about small caps, mid caps, and diamonds this week. And then in the ETF 22, the Russell, the industrials, XLI actually did pretty well. So some of those metal companies and manufacturers like CAT had a pretty good day. I would also say Japan, not too shabby, 3% and 9% for the 1 month period. It's right up in there. So maybe that's our stealth candidate. ETF 32 portfolio, clean energy, decisive. Wheaton had a pause that refreshed, but still pretty good. But clean energy, that gets your attention. Oil exploration, good month, good week, offsetting the crushing moves of the 3 and 6 month period. So XOP, and it's very liquid. Dow 30, Disney just thriving in times of the COVID. American Express, and that was part of that financial move today. U.S. Steel leading the industrials and materials north. Pfizer paused, but between Pfizer and Nucor and U.S. Steel, I think those are 3 companies we got to really enjoy. Apple, it's in the yellow, 2%, and Home Depot 2%. So that ain't bad, but just compared to what else was available. But I think those are the stealth. There's some stealth candidates, and Caterpillar, another one. That's part of this strength in the industrials that we saw. Sector spiders, retail, surprising. Metals and mining, not surprising. Oil and gas and transportation, that's where the industrials are really coming in. And then finance did so well today that the regional banks did well. It was more of a one-day move than anything. And that's after being just crushed. So I think there's more room in finance. And then, energy, not bad, 7% and almost 3%. That ain't bad. So some of those bottom feeders are starting to cycle into potential. Physical silver, crushing. Clean energy, dominating. All tech, all U.S. tech, all the time, just dominating. Energy still suffering. Gold in the broad asset classes compared to these other broad areas. Gold, the defensive play. This is U.S. tech. Gold and silver just really standing out. Sweden doing well with the COVID. Hard to explain Taiwan. Silver was so good that the other components just really pale in comparison. But gold is starting to play catch up. Taiwan zooming, and then some of these other ones are starting to lose some of their mojo. But I think more of that it has to do with just how strong silver was with an explosive once every 10 years kind of a move. The liquid ETFs, the top 30 ETFs by average daily dollar volume. Silver, very liquid now and very volatile. Gold miners, energy sector, Brazil, still a good one. Biotechs, the semiconductor holders, and then biotech and oil exploration. So those are ones that are both liquid and um, uh, volatile enough for shorter term trading. I like to look at the bottom feeders, just energy crush compared to silver. Oil and exploration, still a moment of weakness, so bad compared to where it was. But this was a long and strong, and then a pullback, and now starting to gain. So it's one of those deals. So the short term sell off now makes this attractive, I believe. Shifting to the daily, we've already seen most of this. Intel, Chevron, and Cat. Verizon, Nike, and Diamonds are the strong ones. Just a handful of dojis today. Latin America, Brazil, and oil testing out well on the auto framer. In the Dow, many more dojis to choose from. Some good auto framers in Chevron, Intel, and Cat. I like Caterpillar on that one because it's actually, except for the 10-day move, it's actually been pretty good. And if we saw strength in industrials, that may be time for Cat to start resuming. We're starting to, I think one of the economic plays that Trump has to play this card. He's got to come up with some initiatives in the next 80 days that are going to do essentially what he did with Kodak. And if he can start locking in some deals now to some of these big American industrial companies that are going to be the rebuilding, that he locks in gains to them, whether he wins or not, then that distinguishes him from Biden, who doesn't have a clue about the economy. I would also look at, I think Microsoft and Apple gave back a little bit today, but they've both been so good for so long that I think you got to consider them strongly. All the usual suspects. That's relative strength winners. Intel still has given us room to buy quality on sale, but I think you have to weigh that against NVIDIA, that you might not just want to play the value play. You might want to go with the proven current leader, and so NVDA now makes the argument there. I like that energy and SPY were both, pinched pretty well. There's Intel, Brazil, and Cat with good risk to reward ratios. Gilead is kind of that speculative pharmaceutical research guy. I don't know. Not sold on them. Chevron and Merck in the Dow, interesting place. I made the argument yesterday why Intel was so interesting, and I think it was Procter. Was the alternative, and Home Depot and Apple. I mean, that whole stack right there. That if this thing just keeps powering north, those five are clearly just getting it done. 6 and 7 ATRs above their long-term fair value. You could do worse. I want to come back and say, treasuries are now slightly on the value side of long-term fair value, that little pullback today. Strong differentiation between those in the fall, those that are falling, and those that are the clear winners. I think you see that over here as well, summer versus fall. But what I like here are the ones that are potentially making the turnaround. Intel, Goldman, and ExxonMobil. How do you have a strong U.S. economy without those three guys participating? And with the strength in industrials, and yet U.S. steel is still in the winter, I think that's a hidden value play. Down around $7. That was trading up at 12. So I think you got to at least consider that one. Lots of big winners today on the breakouts in the green. Those are the ones I look at. Coke, we highlighted that earlier this week as a potential value play that's coming through, and also 3M. Both of those have been making some moves. Intel just can't get out of their own way. Latin America and Brazil, waiting to see what the U.S. are doing. Emerging markets on troubles in China. Oil, not persuasive. So I think there's still some downside to the energy. So that makes ERY, that double inverse energy sector, very interesting. But right here, you can see it's the U.S. Even real estate did okay. The Dow, mid caps and small caps, and then the big breakthroughs today in industrials and finance. I'll be looking to see if that has any follow through on Monday, because that's not tech. That's why those become interesting. Everybody understands the tech trade, but those are the two stealthy ones right there. This is just a quiet northward grind. That's a 10% move in the last 30 days. And yet the slope stat is not abnormally gross yet. This is just a quiet crunching move. The way you read this one, this is how far back before the big sell-off. It was one standard deviation above, stretched above the 200-day moving average. So right now that's like 9.5%. Well, back here on the big move, before the crushing blow, it had moved 10% above the 200-day moving average. That's what it is right now. This move here is 10% above the 200-day moving average. So it is not at historically abnormal levels, but that's far enough above that the last time it crushed back to average and 1, 2, 3 more standard deviations down. So this one, if it fails, it comes back to about the 200-day moving average. And if that holds, then this is just a grinding move. But if it doesn't hold, then that's the panic sell-off. So that's always the hidden fear, right? Normal volatility. Review shapes. Where are you? Shapes. Yeah, normal volatility for the last 60, 70 days. You can see that reflected in here in the slope stat, been much more grinding. This was that rocket run to the north. Now it's just kind of been grinding, but still bullish. While volatility as measured by ATR percentage has just almost disappeared. Whether you're looking at it from a standard deviation of 30 days of price, that's really kind of like the size of the frog box. And this is just measured directly by ATR percentage at historical numbers. So this little bump up was a sell-off. So it's now gotten down to the level where it had that sharp volatility spike here. It's now down at that price level. That's the same as this one here. This was more quick to respond because that's based on an ATR 14, whereas it takes this one 30 days of price volatility increase to reverse. So this one is a little bit more sensitive to these sharp moments. That's why I'm still wouldn't be surprised by a sharp volatility event here next week. I keep this, the longer I call it, maybe I'll be right someday. I just find it's interesting to note at the RL90, which bottomed out during this sell-off, caused the RL90 to sell off, and now had that long grind out of the depths. Pause. During this pause, that was enough to make this roll over, but now it's starting to increment higher. The RL30 didn't collapse. This week, against all odds, it just had a nice move. And so, in terms of price, it caught the edge of the river and then bounced, and now it's looking good and getting close to all-time highs. Today's Z-score, if we look at the last 40 days, it's up 11.5% compared to where it was 40 days ago. That's almost a 2 sigma move. Compared to where it was 20 days ago, it's up 4%, which is a 0.7 sigma. Over the last 10 days, it's up 3%, which is a 1.3 sigma. So that's a good move. The move of the last 10, and over the last 5 days, it's up 2.1%, and that's a 1 sigma move. So that ain't bad. And that's everything I want to cover. So to review, what we'll do tomorrow morning, the 10 o'clock session will be a review of any questions and answers from the hybrid workshop. There weren't any the last time I checked, and so I'll do more of a discussion, I think, of the probably swing systems the systems thinking, and maybe I'll cover the flashcards from today's videos, and then no Saturday night podcast, and then Sunday night's podcast will be the where I'm covering trade frames that you guys have posted in the chat room. So you got a couple days to get some work done and take advantage of a fresh set of eyes. And I guess here's what I want to say. Why Mr. Monroe's videos were so important with respect to what he does. All right, here's the point. What he does is specializes in helping manufacturing companies. They hire him. He says they pay us to reduce weight and cost and to increase the safety and convenience and the manufacturability of the products that they've spent all this time being very narrowly focused. And they've gone, really in depth. I showed us with, but they're very narrowly focused on trying to bring that thing to market. So they're inside their own fishbowl, and they may be an expert in the concept, but they're not. They don't have 40 years of manufacturing experience of how to make things cheaper, lighter, stronger, safer, higher quality. And so Monroe has this breadth of experience in how to do all that. And whether it's Barbie dolls or hand tools or airplanes or furniture or automobiles, they have this broad, vast experience of how to manufacture safely at low cost. And what they do is they take these initial ideas that come in from the Skunk Works at version 0.8 that these guys have been they've gotten to the point of diminishing returns. And what they do is they bring their narrowly focused idea into Monroe, and these guys take it apart and they look at, there's 50,000 parts in an automobile. And they study each and every one of those things, figure out what its purpose is and how you could make it and how you can assemble it and how you can make it better, cheaper, faster, lighter. And as a result, you get revolutionary improvements. So when you take your product to Monroe, that's the intersection of your proficiency with your idea and then the broad proficiency in some of these other supporting functions. And in that magical moment, well, that's what happens when you bring your trading ideas into the chat room. And people, not just me, but everybody has an opportunity to reverse engineer and ask the questions and say, consider this, look at that, and how do you do this, and what does that mean? That's free chicken, man. And that's where the potential real breakthrough comes from. So that's why I suggest you listen to the Monroe, Sandy Monroe on YouTube, and the video links are there in on Patreon for you to consider. And I'm going to talk a little bit more about that tomorrow, I think. All right. So that's everything I got, guys. Take good care. Be good to yourself. Keep working out. Eat well. Get a lot of sleep. Be hydrated. I'm thinking about doing some materials on that kind of taking care of the physical plants. I've gotten the first monthly update from those exercise gurus, the guys who are reviewing hundreds of nutrition and exercise and fitness and mindfulness. And so I'm thinking of doing, a home study course on that as part of for the Platinum Edition, guys. I'll take a look at getting that added tomorrow. Maybe I'll do that. Maybe that's what I'll do with Saturday and Sunday. I start adding some of the positive psychology things that I need to start adding, and certainly the systems thinking. So that's what I'm doing with my time off. Take very good care, guys, and we will see you tomorrow or Sunday night or back at work on Monday. That coal will not shovel itself. So take good care.